Welcome to the StockManager.com studios here in the Black Hills of South Dakota. I'm your StockManager Brian Johnson, and a recap of where we're at for the week. Okay, starting the week, bullish. We had a nice push up yesterday. Today, basically doji. Not much movement at all. Dow and the SPX finished just barely positive, but overall it was really kind of a doji day for everything. Now the Nasdaq and the finished down a little bit, but still just kind of in a consolidation mode here. Things to take note of. The bulls did not make any real progress today, so there isn't any real heavy buying going on down here. However, they did break, as you see in front of you, they did break some overhead resistance, and by the end of the day were able to hold that overhead resistance, which was actually much of a surprise to myself, considering the fact that we were quite a ways down here at the end of the day. We had this nice push up and then a hard push down, and then right at the end of the day, all of a sudden this heavy buying out of nowhere came about and kind of managed to help some of the Dow and the SPX hold these lines. So they did a very nice job of hanging on to this this particular line once they broke it. That makes me a little bit, potentially here a little bit more short-term bullish, but really longer-term bearish. The bulls have not proved it to me. I'm going to make them prove it to me. I've been preaching about this for the last week or so. That heavy move down that we've seen it really has done nothing to negate the bear side of things. We saw a nice push up today, yay, whatever. But still, overall, it hasn't hurt anything from a bear side. Very strong. So, really happy with what we're seeing here. From an overall picture, though, good TA in through here. If you guys are into technical analysis, we've had some beautiful technical analysis where we've been touching, retouching, testing, holding a lot of different lines of support and resistance, so I'm very happy. Here's going to be my theme, things I want you to look at going forward. Can we hold on to this line coming into tomorrow's trading? That'll be of great importance to the markets themselves, to try to keep themselves here. That doesn't mean we can't go down, but if we go down, we don't want to really have a hard push down. We want to kind of wander our way down, if at all. And that means hold the outside of this line. So I would ask you to just kind of really keep your eye on that. If in fact we do go down tomorrow, at what rate do we go down tomorrow? And can we hold this line as we do? If we do, still more short-term bullish than bearish. Okay, so let's move off of this onto the daily. And you can see the little doji that we put in today. Okay, sorry about that, guys. I had an interruption in my service. Not uncommon. Let's go back here and look at the Dow Daily. Here it is. Here's that little doji. So that huge drop down. We've had 2 days. Yeah, not much. 1 point. That's not a whole lot on the Dow, by the way. So not a lot of movement here today. Just dojiing out. Keep in mind that what we've done so far does nothing to hurt, harm, negate, destroy any of this bear move at this point. I am still more bearish than I am bullish on the markets. Really want to see them get back up into these areas, and then we can start talking more bullish terms. But as it is, 12.7, 13.3, broke, staying, holding. Any further movement to the downside, I really like these 200-day moving averages, and that's on all of the charts going forward. NDX 60 minutes, same thing here, up into overhead resistance, back down into support, and stall out in between. This is lather, rinse, repeat here for all the markets, guys. Most of the all the indices I've looked at so far did pretty much the exact same thing. Up, into resistance, back into support, and held by the end of the day. So here we are, trapped on the 60-minute between these two, waiting for a break one way or the other. I like moves back up into here. Nasdaq has not been strong. Keep in mind it was down today. It was the weakest of the 3 indices. I'd rather see it strong, even though Apple had a start. It started out really good. It was totally weak, kind of an exhaustion gap type thing for Apple. Could be just a pullback. I'm not real sold on the fact that it dropped as hard as it did. Still could see some nice upwards action out of Apple, but without any real major Apple movement, I just, the Nasdaq struggles. It always does. Yes, it can move up without Apple. You don't have to have Apple, and it's proved it over and over that it can go on its own, but man, it's so much easier when it does get help from Apple. So until Apple finds its feet and starts moving and moving along at a normal clip and pace, I got to be more kind of neutral on the Nasdaq. I would prefer not to short it, would prefer to go long, but it's got to show me some strength. Got to show me some strength, and I think that comes on the heels of some Apple strength if it'll find its feet again. So going forward, here we are trapped here. Now this is not outside of the channel or outside of the overhead resistance we've been following. It's stuck nicely below it, waiting for that next major move. Back up into here, now we'll talk bulls. Other than that, yeah, it's just a pullback, just a pullback. So don't get too anxious on the bullish side quite yet. Notice what we saw today, not a doji, was a bearish candle. However, more of a consolidation candle. 6 points really isn't a whole lot to the Nasdaq. This looks maybe a little bit more ominous than what it was. I'm not going to look at this as any kind of a reversal candle or nothing like that. It's just a candle in the middle of nowhere. So tomorrow, looking for potentially more bullish action. If it does, great. We'll see if we can get it back up into the 20-day. Otherwise, yeah, just kind of more bearish here. So I'm still very neutral on the markets themselves. Definitely more neutral bearish, I should say, on the markets itself. I'm more short-term bullish maybe, and longer-term bearish depending on which chart we happen to be looking at the time. The weeklies, you can see, trying to trace its way back up into that 20-week moving average. Way too early though, got 3 days left. Let's see what Friday brings. SPX on a 60-minute, look at that. Break and hold, just like we saw on the Dow. Look at this, up into overhead resistance, pull back into support, and stay in between them, just like we've seen on all the other indices. So, good confirmation here. We're seeing a lot of the same things on all the different indices. That's nice to see. But once again, we've got to get way back up into here until we start. Before I start talking bulls. Until then, it's just a pullback. Nice little moves above 1340, 1350 give you opportunities to maybe take a little bit of a long here back on the SPX side. But drops below this 1300, 1290-ish area, that's your opportunity to maybe look at a short into the lower areas, and that lower area is going to be the 200-day moving average. These are just looming below us here. So any further bearishness, bad news, bad whatever, markets stink, Greece is an idiot, whatever it might be that's released is going to maybe have an effect on this. But to be quite honest, we don't need news at this point. The bears have proven themselves, and they can drag this thing down on nothing if they want to. 200-day moving averages, big, big, big levels of lower support to be watching on any further bearishness out of any of the indices. Keep that in mind. Moving on to the VIX daily, you can see the bounce down and back up, hitting my what? Oh, that 20 mark that I like to watch. We are definitely outside of the comfort zone, so we're outside of complacency and into some fear coming into the market. Like to see this close. It has done that numerous days in a row. That's good for the bears, showing some confirmation to the moves they've been looking at. Looking to see if we don't get a little bit more of a follow-through on this as well coming into the end of the week. Here's the weekly. We've got one close above it. Came back into it and now are still in between. We'll see what the rest of the week brings, but you'll notice back here that we've only had 1 week that closed above the 20 in numerous months now, going all the way back to the beginning of the year. Once we got back down into this area, we have stayed back down in this area for a long time. It's been a long time coming for this bounce. However, I don't want to see, and I mean, this close last week above the 20 is great, but numerous closes are what really start to bring in more of the continued trend in the particular market. So as you see right here, we are back above it. We'll see where it closes on Friday. That is the most important thing, is where this closes at the end of the week. FAS on a 60-minute looking much like all of the indices. Love this thing back up and over 85 from a bullish standpoint. Otherwise, you know, any kind of bearishness back below the 75, 74 mark, that's your area to be looking at for another short in FAS. It's had a little bit of a bounce coming up close to overhead resistance, not as pretty as the indices are, but then coming back to rest right in between them, as we're seeing on all the other indices. Go figure. These, you know, are the financials. They kind of follow everything as it is anyway. But these moves right back up into the 85 mark, great opportunities for a long, back below 75 for your short. From a daily perspective, that fits nicely too, and notice what we did. We have been back to the 200-day moving average, below it and back above it. Now they have to hold it. This is why it's so important down here. This is so crucial in this area. So further weakness in the financials, I would assume, is going to drag the markets down with it. Maybe this takes it down into these lower 70 areas while the indices come back to their 200-day moving averages. We're seeing it on some of the sectors. Let's see if we get it on some of the indices now. Here's the FAZ for you that like to play that. We broke up and out of this thing, have come back into it now and are trapped once again between 20 and the 50 as would be expected. Looking for breaks back up above here, looking for breaks back down below here, depending on which way you want to play it. Obviously, if you're in this thing to the long side, and a lot of people I know are, they love to play this thing and they love to play it long. It's all about knowing when to get in and when to get out. That's very important. Too many people jump out early of these things and they look back and go, God, if I'd have just held a little bit longer, look at what I could have made on this thing. So patience is a virtue. Understanding when to get in and out can really, really make a difference in your account, believe me. But as you see here, drops back below this area here, yeah, really won't want to be long at that point. I'll give it time to figure itself out at that area. If we can get back up here, long's good. We'll look at it back up in this area. Good strength since the beginning of May. As the indices have dropped, this of course has been one of the forefront, one of the best trades we've had from the newsletter. So, side we were above 24, 25, 26, and 27. Made very good money on it. Now we're all kind of sitting back and waiting for the next better entry. Notice today what we did, kind of a hammer. It doesn't really matter. I don't know if I'd call it a hammer, but I'm not sold on the candle yet. I don't look at it as a reversal candle. I still need a lot of information coming into the rest of the week to really confirm any of this as being setting up for another hard push to the upside. Looking at this tomorrow, though, back above this 29, that would do it. That would clean it up for me. Once again, breaking this channel was huge, so now let's just see if the bulls can continue with this drive to the upside in the financials. Those are your entries, those are your ideas, those are the things to be looking for as we move into the middle end of the week. Keep in mind, we have Memorial Day next week, but I will be back with you on Thursday. I'll make sure and take some time out, carve it out for you guys, and get it done on Thursday. We'll reevaluate where we're at then. Shorter term bullish right now, longer term still bearish. No push today. Nobody was interested in major buying by any means. So very interested here in what the next couple of days certainly of trading have in store for us. All right, guys. See you again on Thursday. Oh, newsletter. 28. Shameless plug. I do it every time. $28 a month for the newsletter. You'll love it. Just had a new guy, Dave, sign up for it. I hope he likes it. I think he will. And the mentoring. If you're really struggling, if you're looking back at this chart going, what the heck, how did I not be short, or why did I not stay in it, or how come I wasn't a part of that, join the millions of other traders that just didn't seem to get in on it. Great trades were to be had by all up here. I tried to give some good entries for you on the way down, but if you want to know how to do this for yourself, if you're one of those people that are like, you know what, I say this a lot, and I haven't said it in a while, so I'm going to say it tonight. If you're one of those people that likes to learn how to fish and isn't so interested in being handed a fish, especially when it comes to this trading stuff, so that you can take care of your money, your parents' money, your family's money, whatever other money you might have, consider the mentoring insurance for your account. I mean, who wouldn't have wanted to buy some insurance for their account in 2008? This is what it is. Education, knowing for yourself how to handle your own money. Nobody cares about your money more than you do. And it's important that you take responsibility for your money. And if you really want to be on the cutting edge, if you want to be ahead of everybody else, you've got to have a better education than the guy next to you. Otherwise, you're setting yourself up to make the exact same mistakes they are. So write me about the mentoring, call me about the mentoring. Now's the time to do it. Get in now while we still have opportunities to catch some of these moves both up and down. Let me teach you when and where to get in, how and why you're doing it. More importantly, explain to you this is why you're doing what you're doing. Not because Brian said so, but because there's a psychological reason for why the markets are doing what they're doing. These little candles you see in front of us, people forget. This has nothing to do with candles. This has everything to do with people, and it has everything to do with psychology of these people and the decisions that they're making at certain levels in the market. That's what you want to be aware of. The candles are nothing more than just a pattern, just an illustration of the decisions that are being made by people on the back end of that. So if you can look at the candles and understand what's going on psychologically with the people on the back end, you're way ahead of the guy next to you. So write me, call me, let me know. Let's get started. See you guys again on Thursday. Bye.